here, and it tells you we got no demand. If they do a test on the very next bar, it's very, very bullish, likely to go up. And lo and behold, the same thing's happened here. There's no signal there, look, but that's definitely an up thrust, sign of weakness. And they tested, look. There it is. It's a red down bar. They lunged it down. It's closed above the middle. And when you look at the activity down here, the volume, it is less than the previous two. It's something that you need to be alert to. Helping. As soon as you see that, up it goes. Fairly widespread up, look. Slight increase in volume. That's okay. And you notice it's almost gapped up, look. Not quite, but that means that they've recognized the strength here. Up it goes, closed near the high, next bar's up. Right. That's it. The volume's still bullish. Bullish volumes, expanding volume and up bars. So I was looking at that, but you should be aware of these things. It's a very clear principle, because that is very common. It usually happens on a red no demand up bar, no demand. But here it's the same weakness, look. Unfortunately, there's no signal on this time frame, but obviously they recognize that as weakness, and they test it. Up it goes. And we notice too, look, there's another one. There's a red arrow there, look. Weakness has appeared. Automatic signal. Professional money would see that. So we get the red down bar, look. What? Volume is lower. It's closed in the middle, look. That's testing that weakness there. Now that's expected to go up because of this in the background, look. You've got some very clear signs of strength appeared here on these lows. Yeah, that says we have a bottom reserve, a reversal. Okay, so that's interesting. As soon as you see that, if you see a test, you know it's going to go up. That's an up thrust, a definite sign of weakness. Definitely, the professional money saw that bang, tested and up it's going. So right now, it's still attempting to go up. Now, there's some principles there that you need to absorb. Now, the markets keep repeating themselves. So you're not wasting your time embedding those principles in your mind now, because it happened time and time again. It'll happen probably thousands of times during your lifetime on various charts and various time frames. Now, are there any questions, please? Rita's looking at the screen about this particular chart.
There's one question. Edmund would like to know, why is that bar with the red signal a weak bar?
Right, why is that? We assume we mean that one. Okay. Got red arrow. What does it say, Peter? Weakness has appeared. Now, why did that signal appear? So look. Right. Well, it's an up bar, look. But if you notice, the spread has narrowed. And it's closed well off the high. And the volume is not really with it, is it? You wouldn't call that bullish volume. It's not a test volume either, but it's bullish volume, it's expanding volume and up bars. Anyway, the computers pick that out, and you can bet your bottom dollar the computer's right there. So the very next bar, well, the signal must have been right from the tested look. Very low volume, rammed it down, closed in the middle. They tested that bar because of that. So that signal must have been correct. There must have been weakness there, even if we can't see it very well. You get some of these automatic signals, they're quite clever actually, some of them, I must admit it. Right, so it must have been right for to test the market like that. Any other questions, Rita?
Would you describe that bar with the red signal as lessening of buying pressure?
What's it?
Could you call that bar with the red signal lessening of buying pressure?
Would I call that bar? No, I wouldn't. It's probably, let's have a look at that again. I mean, these things come and go as far as I'm concerned. The computer's been quite smart picking this one up, because it's not all that obvious, I must admit, but it's gone up, look. When these spreads narrow, and it closes off the high like that, and the volume is not exactly bullish. Don't forget, bullish volume is expanding volume on up bars, while decreasing on down bars. That's bullish. It's like here, look, there's an up bar, right? Decreasing on down bars. And there's a decrease, look. So I wouldn't dwell too much on that. It's not all that obvious, but the computer was clever enough to pick that up. It must have been right for the test on the very next bar. Look out for these testing, especially on these lower time frames, like this 15 minutes, 5 minutes. That's a very good indication of higher prices. And if you're a scalper, you're going to make money. Okay? Any other questions, Rita?
Edmund says it's probably like a no demand, meaning professionals are not buying, but they're not actively selling either. Would you agree with that, Tom? It's probably like no demand, meaning professionals are not buying, but not actively selling either. Yep, Tom's agreeing, that's probably right. There's another question here. Why does the market generally come down after a bottom reversal or a two-bar reversal and bounce back?
Why does the market bounce back after a bottom reversal? Is that right? Yeah. Why, Peter? Yeah,
just read the question again. Why does the market generally come down after a bottom reversal or two-bar reversal and bounce back?
They're testing the sign of strength. Look, if you're dealing in thousands of contracts, you'd be very, very nervous yourself. You're not going to jump in there unless you've tested the ground and you know what you're doing. And and I can assure you they're just concerned about their money as anybody else, believe me. That's what it is a test. If the market goes up after a bottom reversal, you could bet your bottom dollar that down bar that you're talking about is on lowish volume, possibly closing in the middle or so. It's a test. That's all that is. Testing is very, very important. Very important to us too, because you sit here and see them doing it if you concentrate enough. I mean, that up thrust we saw here at 10 to 5 UK time, I was watching that. I thought, well, that's coming off. Well, professional money would see that, but then they thought, we could probably get higher prices, but we better test first, and they did. Look. Any more questions, Rita? Yeah, well, put up a daily chart of the future. Now that's a daily chart. We looked at this quite often last week. It's obviously been chopping sideways here. I mean, that's quite a period of going sideways, isn't it? The reason is it's hit that top trend line, look, and it's meeting resistance. And to get up through that, they look as if they attempted here, look on that bar there, to have what we call a shakeout, where they mark it down on quite a wide spread look, but on that shakeout look, there's not a lot of volume, so there's not a lot of supply there, and on that is closed almost well up, certainly the top of the lower quarter look. Now we know that was a bullish shakeout because the next bar look, they responded, look. That's even a gap up, look, so they vigorously want to take that up. But it's that top trend line that's given them trouble. Then we have the up thrust. And it has succeeded at the moment in going above that trend line. But if we see any up bars now, especially if they're on narrow spreads, closing in the middle on heavy volume, that market is going to fall. But that certainly looks like a bit of a shakeout there. That's what gave it the momentum, the push to go up through that trend line. Now, before we move on to another chart, any questions about that daily chart? Okay, if you would like us to look at any sort of chart now.
If there are any charts that you want Tom to look at, please put them into the question box. Carl, do you mean Tesco's there? You put Test box. Due to all the so we don't. Have we got UK data now? It is due to all the news, he says. So, do we have? Just see if we've got that data. Today. 24th. Okay, we don't have the current data at the moment, I'm afraid. Sorry. PBR. It's in. It's That's that. PBR. David.
We got end of day. That's how it day. Shall I get rid of that? Yeah, shall I get rid of that trend line at the bottom? Now this is the stock PBR. Check
Okay. It's PBR, Tom, for David. I'd like you to look at that.
And that's a stock, is it?
Yeah.
No.
Yeah.
Yes.
No, NASDAQ's not a stock. It's index.
No, it's
Stock part of NASDAQ. First time I've ever seen this. But there's a high volume. Look immediately, look. You can see why it stopped going up. Markets don't surge in high volume. Bullish volumes, expanding volume and up bars, yes, but not excessive volume. And that's for you, your skill as a trader. You have to judge whether that's excessive or not. What's that say? Supply. And that's why. It means that supply is, in fact, overcoming demand. Now, in hindsight, there's proof of the pudding, look, because that's right, that bar there made that go sideways, look. There's probably no demand. Right. So it looks as if it's obviously trending up. And of course, these are all testing down here, look. Test, look. As soon as you see that, you know you're going to get higher prices. No matter what the news tells you or anything like that. Now I notice that even here, look, there's a red arrow.
That's an up thrust.
Up thrust. But if you look carefully at that, next bar is in fact a test, look. Although it's a blue up bar, it's a test. In other words, it's got a bottom tail to it, and the volume has dropped off. So they're testing that. But there's definitely a clear test down here. You know you're going to get higher prices. There's no signal on that, but that looks almost like bag holding. Look. It's a daily chart, isn't it, Peter?
Yeah.
I mean, that would almost fill the bill of back holding. And a serious sign of strength. Now, unfortunately, the computer hasn't picked that one up. But it's gap down. The criteria to back holding is, the fact is, the bar's gap down, probably on some horrendous news. It finishes up in a narrow spread, closing middle or high, and very high volume. Now, it's a pity, really. But if you looked at checked other time frames, that would probably come up with back holding. But that's definitely back holding. It's definitely a sign of strength. Definitely. Of course, the news will be horrendous. That's why it gaps it down. So you've got to believe what you see, not believe what you hear or are told. And up it goes. Test look. It's another form of test look. What's that one say? test, right. So this is definitely a test, look. As soon as you see that, you'd expect high prices. And so, if we see a test, it's going to go up. If we see no demand now, or high volume in that bar, it's not going anywhere. It's as simple as that.
Okay, a few requests for the euro, the daily, the future, euro futures. A few requests there. 6E, yeah. Put that down.
What are we looking at?
This is the euro daily charts.
Oh, the euro. Right, so we've got the euro here, daily chart. Now we've got lots of signals here, by the look of it. I mean, it's quite good at picking all these signs of weakness up, look. No demand. Right, off it comes. As soon as you see all these red bars, look, that's not just telling you it's going down. It's telling you that professional money are deliberately making sure that the low is always lower than the low or the close of the previous bar. Because what the whole idea is to lock as many traders in as possible. They understand crowd or herd behavior. People that are locked in at higher prices here are what we call potential weak holders. Right? They're hoping and praying for a rally, but they're not allowed to have it. Now, a sign of strength comes in eventually. Right? That tells us that there's no supply. After a down move, it's very important. And we see why. The volume is clearly less than the previous two bars. The spread has narrowed. It's down into what we call fresh low ground. Not new no ground, but fresh low ground. There's nothing immediately to the left. And on that, look, it's close to the middle. That's why it's come up with that signal. That's all it's looking at. We don't keep secrets. We tell you how the signals are formed. If you're a clever enough programmer, you could probably do your own. Right? Now these are tests, look. When you get these down bars like this, there's a bit of supply present. So that's why they probably tested again, look. That's interesting. There's a little bit of supply on this bar, look. So they have another go here, look. Now this time the volume is low. Look at that. Alright, what's that saying? Test, they are. Test. Now, as soon as you see those tests, you know professional money is expecting it could get high prices. Of course, there's always a lot of, if you've been listening to the news very recently, the American government's prosecuting some English traders for not doing the right thing, causing crashes and one thing and another. So it's going on all the time. Apparently, I'm not quite sure exactly what the problem was, but apparently you can put prices up on your screen number 2 that you're in the market to buy at those levels. Now, if the market's well below those prices, they hope that other traders can see those buy orders that you put in and think, oh, I'm going to mark my prices up so I can get that. Of course, you no intention of committing yourself to buying. It's fraudulent. You know, it's just there. Well, they do that sort of thing all the time. They've been doing it for years. And that's why these bars up and down like this and all sorts of things going on with news and one thing and another. Human beings can't help it. That's how they operate when it comes to money and trading. That's what they do.
Yeah, just making an observation. We've had a few people who couldn't see the screen, and it could be the device they're using. Anyway, like an iPad or something. Screen is fine for Edmund. Okay. Well, I might mention it to Gavin. Something may have changed. Well, like one lady, she was using a different device, but when she used a PC, she could see the screen. Someone else here, yeah, couldn't see the screen. Oh, it's a go-to issue, apparently. Right. Anyway, gold, Tom. Can we look at gold? And Bruno as well is asking for gold. It says gold dropping today, and will it continue?
It's just updated gold chart for us. Is that it?
Bear with us, folks.
Bear with us, Peter saying.
If you want to wait, can I say something? I've had to restart that end of day program, so please hang on. Yeah, Tom was talking earlier about this business of the flash crash. This someone from the UK being arrested for apparently placing orders that he didn't intend to really do. But as Tom says, that's been going on forever, so it doesn't make full sense to me. If anyone in the room's got any better ideas, say. But it also strikes me as one person causing a flash crash in the US seems, you know, odd or unlikely. So perhaps he's operating in concert. I don't know. Anyway, right, here we go. So gold, and let me read the question again. Just looking for it here. Actually, Seb Mamby is in the room saying, yeah, this chap was putting in orders, then pulling them. And also says he's a scapegoat. Well, I can't help but sort of agree with that. As I said, I've seen constantly these brokerages putting orders in and then just disappearing again. So who knows? Anyway, that question about gold, I can't see on the screen. I think the question was along the lines of what's happening with gold. Today it's going down. Is that Rita? Correct. And will it continue? Let's just move this trend line out of the way. here to here.
Yeah. That's it.
Right, so we've got some new trend lines. Yeah, so I haven't seen the gold chart today, but apparently it's come off a bit, or a lot, I don't know. I'll check.
Yes, this is only up to date to yesterday, and this chart looks weak at the moment. You can see we've drawn trend lines. In a falling market, the first two highs and the first low is traditional Wyckoff way of drawing trend lines. Right, and you can see that widespread down, closing near the low, an increase in volume as it rushes towards the former area of support, which is there, look. It's usually bearish. Now that bar's gone up, which was yesterday. Demand, though, it is going up on no demand. So you'd expect lower prices now. Okay, so that looks at the moment as if it wants to go lower. However, we do have some sort of stopping volume here, look. Now if we draw a line along that area, look, where that stopping volume came in, if it comes back down, you need to see a down bar, and it goes there somewhere, and the volume is clearly low, then it's going to go up a bar or two. But to me, that looks weak at the moment. It looks as if you're going to get lower prices.
Yes, David is saying gold is down to 1175. So, Tom, 1175 will be down here somewhere. So it has, yeah. Okay, the pound, the cable, Peter, the pound. Put up the 10 or 15. We want to find 7 a.m. UK time. Stephen is saying, can we look at that? This morning around 7 a.m. Right. What time frame, Stephen? Have you got a particular time frame that you're interested in? $15 minutes. So we're just going down back to 7 a.m. in the morning, Tom, for UK time. Stephen says he keeps missing scalp trades. Right. We have to put less bars up for Tom.
So,
and he's looking for scalp trades.
hello, Stephen. Yeah, 7 a.m. Just wind back a minute, Tom, just to see what's going on then. Yeah, so if we look at 7 a.m. UK time around here, I mean, perhaps Tom can see something there. I personally wouldn't have been looking for a long position at that particular time. Perhaps Tom would be. Tom?
Where's the time here?
Before the market went up, I think Stephen
Here.
was saying I keep missing scalp trades. I mean, do you see anything there to say jump in?
I don't see anything right at that spot. course, we do have some signs of strength in the background, look. So there is some signs there. Well, it's 4 in the morning, so you'd have to set your alarm to catch those. Right. But if you like to scalp, now this is an opportunity here, look. That's a test. We talked about that all the time. Right, the computer tells you to test. And what it is, it's testing these signs of weakness that only appeared. So you are going to get higher prices. Whether you can make any money out of that, I don't know. Because there's red arrows appeared. Notice how the weakness is appearing. You've got your signs of weakness appearing. They've tested it, yeah, it's gone up. But still producing red arrows here. And notice that it's rounding over. An area of rounding over. That is traditionally shows selling, distribution. Every time it goes up, they sell into the up move. Right. But lower down, there's more signs of strength suddenly appeared, look.
Potential stopping volume.
Stopping volume.
Basic test.
Basic test of the stopping volume. Now, what did I just say on that previous chart? If you draw a line along there, along the stopping volume, look, which is here, apparently, if they test that, it's going to go up. It goes up, and lo and behold, there's your test. And the volume is lower. So where there was some supply, it's not easy to see because it's Globex, but you've got the red arrow, the green arrows here. That's definitely telling you it's going up. So this is again, a very common principle we see. We see the strength coming in, goes up a bar or two. You may even see an up thrust up here or some sort, but they mark it back down. It's a level that's important. It's a level, the previous level, right? And they have another test look. There's another scalping opportunity. Now, admittedly, I know in hindsight, it's easy to see all this stuff. But if it's there in hindsight, it was there at the live edge. Okay? Right at the moment, it looks a bit dodgy to me. Just leave it alone. There's nothing really all that clear. Although there's not a lot of selling pressure in this on the pound look. Got some weakness appeared here, yes. Not a tremendous amount, but there's obviously a bit of supply there, look. They tested it. But on that test, couldn't really go anywhere. Don't forget, that's a sign of weakness in its own right. These look like weak bars in the up thrust. So it's not really going anywhere at the moment. It's the sort of thing you say, right, nice to see you, goodbye, I'll see you again. Only trade if you see a clear principle that you fully understand. If you don't, they're going to get you. No question about it. But they can't get you if you can see a definite, clear principle appear. And of course, your skill as a trader has some experience. Okay.
Just one thing to add that I found quite useful was that if you're looking for scalping opportunities, of course the principles apply across the range of time frames, but if you look at a chart and if you first of all look to see where the volume is, where is the recent volume, large volume, high volume, and then work off that if you like. It doesn't mean you do a particular thing because of it. For example, here, if you happen to switch on at that time there, you see that very high volume compared to the past, you think, well, okay, that could mean weakness, quite likely to, because of this bar, and the information is in the dialog box, potential buying climax, essentially supply. So that's what I've now used for just to find where's the volume and what happened on that. So that's a quick and easy way just to see what's going on. So that would look like weakness. There are other things you can look for, but that's just one of the obvious things. After all, it's called volume spread analysis. What was the question, Rita? Look at what?
Oh, by the way, Sebastian's saying at 1:30 that was news there.
Yeah, Sebastian says this one here was news.
A request for the daily chart of the pound.
There we are.
Tom, you need to listen to this carefully. In pound, this is a daily chart of the pound. The price has gone slightly above the high for the 18th of March. Can you pick that out for him, Peter? There. Can you look to your left, Tom? Peter's with fiddling the... Yeah. Okay. The price has gone slightly above the high for the 18th March, which was a huge wide bar. Also today, it broke the trend channel on the daily, extending from the 15th of July through to the 26th of February. Is that a precursor to higher prices? What should I look for?
Well, it's all right saying, you know, what do I look for? Higher prices. But surely you're way, way too late. The golden opportunities are obviously away in the low points. Now, that's why you need to study what happened at those low points, especially when there's signals, they're automatic signals. Now, what's good about the signals is they were written, right, only how we tell you they were written. We tell you what's in there, right? But the thing is, at the time when you wrote them, you were under no pressure at all. There was no news bothering you. There was nothing. You just put in the plain facts of what you know, how these markets work on supply and demand. Simple as that. So you need to study those. It's the low points you want. These testing and shakeouts and one thing or another. I mean, once it starts rushing up like that, you could bet your bottom dollar you're going to get sudden high volume coming in and narrow spreads, and that's going to at least come off a little bit. But you've got to pick up these low points. Study the low points, and even ask yourself a question: why did I miss that low? Why? There must have been a reason. Were you looking at it? You weren't looking at it? You've gone down the road for a coffee? You didn't understand it? You didn't recognize it? And there's some reason. So this asking what to do up here is what really you shouldn't do. You're chasing the market. You're chasing the market here. You don't trade like that. You learn to recognize testing and these low points. You don't chase the market. That's what the herd does. Now, the herd behavior, or the crowd behavior, if you're a professional trader, money, you're fully aware of what the crowd or the herd is liable to do on these moves and on the news that may accompany them or not. And that will help you in your trading, won't it, if you're a professional? But that's what they call chasing the market, which is a no-no. You don't chase the market. You've got to really ask yourself why, why did I miss this? Why? Or even further back, why did I miss that? And that might help you to become a better trader. Or any testing. Why did I miss the testing? Not should I rush in and buy now, because that's what the herd does. That's what the professional money wants you to do. They can mark it up, suddenly reverse it, lock you in, and you become what we call a weak holder.
Yes, Sebastian talking, which is useful because we've had, hang on, Tom's coughing, a question about, can you talk about springs and upthrusts, where they appear and how to trade them?
Repeat the question, Rita.
Sebastian pointed out a spring there at the bottom.
Yeah, down here.
And there has been a question, could you talk about springs and upthrusts, where they appear and how to trade them?
Well, the thing is, all I can say is that when these principles appear, you recognize it, and then as soon as I see anything, if I can, I will go straight in and buy or sell, whatever it is. I don't wait for any criteria there. I mean, the spring is a spring. Now, the term spring, I personally never use that a lot. It's because what it really is, in original Wyckoff stuff, I think he mentioned springs, but really a spring is a shakeout. And the springs seem to happen more if you're trading individual stocks. And they go through an accumulation phase for however long it takes. And then just before the up move, they ram it down, right, mislead as many people as possible, catch stops and so on, and then reverse. That's what we call a spring. So, but, you have to learn to recognize these things. There's no hard and fast rule or mathematical formula that allows you to get in. It's your skill as a trader that has to kick in once you learn to recognize the principle and read these charts. I mean, we've bombarded you with what a spring looks like and what an upthrust looks like. As soon as you see an upthrust, you'd expect it to come off. Now, admittedly, we saw a clear upthrust in that 15-minute chart that we looked at earlier. That happened about 10 to 5 UK time. Now, okay, normally you'd say if you're a scalper, you'd short that. However, if you immediately see a test on the next bar, you know you can't stay in that short. You have to close the position because they've tested it. But once you learn to recognize these principles, then your skill as a trader will kick in, it has to. And you will have that skill with you for the rest of your life. And I can assure you, you will never, ever regret it. No matter how long you live, you'll have that with you, ability to read those charts I mean, when you listen to some of the news, it's almost like listening to a comedian, some of it. I mean, they were talking about Tesco's here yesterday or the day before, and they said, oh, Tesco's has lost billions, this, that. However, when the news came out, the market shot up. That's what they said. And the reason it shot up was because the bad news was out. There wasn't any more bad news to come. That was their reasoning on TV news why it went up. So you're up against all this sort of nonsense. You hear it all the time. They don't know what they're talking about. I can assure you that.
Yes, okay. Winston says, on this chart here, Peter, could you point to that big blue one there? Yes. Can you explain the extra wide blue bar closing in the middle and then the market moving sideways?
Can you explain that blue up bar?
That's it, and the market then moving sideways afterwards, which I suppose is correct, isn't it? Although the volume's not.
Well, you can see in hindsight they were thinking trying to buy it here, but they marked it up, look. Right? I mean, you heard about all the skullduggery going on. The US government wants to prosecute some English traders. Right? But this is where you get all this stuff look like this. It's obviously being marked up, look. Very high, and they're only to collapse in the middle. So there was, in fact, supply there. Right? And it's that made that market go forward, sideways like that. However, it is dropping and testing, look. So that's normally, you get a bar like that, that's normally a sign of weakness. And that's the weakness that made that go sideways like that. And even down to these low points here, look. Okay?
I'll just read this out. Is it possible to include at the bottom of the chart, below the volume bars, the added character traits for each price bar? I mean, I'm not quite sure what that means.
So I'm not quite sure what that question means. Where does it say it, Rita?
Yeah.
Oh, yeah.
Question.
So, is it possible to include at the bottom of the chart, below the volume bars, the added character traits for each price bar? Give us an example, Bowden.
Talking about IDs and all that stuff.
Don't know. Are you talking about adding
Technical data.
technical stuff, you know, oscillators and all that?
Ultra high volume, widespread, etc.
Oh, yeah.
It's there, isn't it?
It is there. Normally, I don't know if you can see it on your...
Oh, it's not. It is normally. Why
Yeah,
is it not on there?
it's normally, but it's actually, there's something going on here.
Oh.
So normally speaking, it's there, but let's just do that. I can't see it. There we are there. So, for example, if you can see that now, I'll just change the bar. So the bar's up, volume's high, spreads over. So it's normally there actually, but on Tom's machine, I noticed it the other day, for some reason when you have a full screen display for that window, that information disappears down the bottom here. Now why that is, I don't know. Who knows? yes, you're quite right. Actually, it is normally there.
What is it?
Does that answer your question?
Okay, we've got a request to look at EMF.
Right, Peter's just putting the chart up.
That's something called EMF. No idea what it is exactly. What's the question?
Can you give a view on it?
Well, it seems to come up with loads of principles. Look, there's a test, no signal on it.
Is that the correct chart? Can you ask Tom?
Is it?
Can you ask the person?
Is that the correct chart? There's certainly lots of information on this chart, that's for sure.
The principles are the same anyway.
Principles are there, look. It's interesting how it's unusual for the software not to give signs of strength right on the lows and right on the tops. But that's a test, look. Look, clear test, look. I mean, imagine if you burnt that into your memory and sat there looking for tests because you got a scalp. Look. That's going up. When you see a test like that, a test is a red down bar on the narrow spread, closing middle or high, on volume low, less than the previous two. Right? And, of course, you've got strength in the background. Of course, there's the strength accumulation all through here. So as soon as you see these, there's another one, that's going up. And, of course, some charts are better than others for doing it. The reason for that, of course, is it's the same traders trading the same instrument all the time. That's their way of doing it. So you tune into their behavior. And this chart's a beautiful example of loads and loads of testing. There's something here. What's this? Another one. Test. The computer even tells you there's a test. There's one there. There's no signal on that. So it's very, very interesting, that. Now, with the new software that Gavin Holmes and co are coming up with, I like it because you can program these things in to tell you, say, when these charts are perhaps showing a test. If you want to specialize in testing, or you might specialize in testing and upthrust or something. Therefore, there could be all sorts of testing going on. And if you look at this chart, you're unaware of them in other instruments. It's going to make you, I would have thought, a lot of money if you specialize in something like that. Because you can see they work. That's how the market works. So they have to work. You may occasionally get what we call a fail test. And that fail test is because there's just too much weakness in the background, the near background. And you see that occasionally. But it's all right. You just close the trade out and make sure you're not long.
Okay, we've run out of time now, so sorry if we were not able to answer your question. But we'll be back next Friday at the same time, and also we'll be doing the newsletter on Sunday, so look out for that. Have you got anything else to say, Tom?
We are doing a live event.
You are.
Do you know about it, Peter? No. We are doing a live event in London on the 8th of May. That's a Friday. Of course, we'd love to see you if you happen to be in that area. For information, of course, you have to go to TradeGuider's website. Okay? But you can come there armed with all your questions and talk to us. Anyway, I say thank you very, very much for listening to us. It's always a joy. And we'll see you. I'm doing the newsletter Sunday, of course. We'll see you next week.